I wish someone had explained all this to me in my early 20s, in high school, 25. It took me years to just learn this stuff. Thank you guys. Thank you everyone for joining tonight. Let me get this chat here. I am excited to finally do this because investing definitely, it's my number one most requested question, and for good reason. It's not something we're taught, not something we're explained how it all works. Tonight, though, that all changes. Tonight, the investing I'm going to show you guys is the hands-off approach. It's more of a set it and forget it. I will say that there's plenty of different ways to invest, especially in the stock market. But what we've learned and the principles about to show you guys, they just work best for us. And a lot of financial professionals would say this is the way to just set it and forget it. Again, there is no right or wrong way. I just hope that what I can share would just encourage you guys to know that it's okay to not know everything, but hopefully I can just show you how to start. So we are going to get into it. Hello, everyone joining. Once again, thank you, Victoria and my wife, for telling me the chat was disabled. So I learned not to do that again. But are you guys ready? Are we ready to get started? Learn how to invest. Simple way, simple approach, hands off, and more so just a basic understanding of everything you should have been taught. But awesome. Thank you. See you guys in the chat. So what I'm going to do is everything here is going to be just a little raw. Everything is just going to be my authentic approach to investing and how God has just used the last 5 years to take us from a place of not knowing anything, even as humbling as it is. Like, I thought I would have had everything figured out at age 28. I see all my friends, so I thought, graduated high school, into college or graduated college, and there I was at 28 with a new home. So that was great. We just bought a 1-bedroom townhome condo. That was awesome. But then just shortly after, found myself taking a risk to go all in for my dream job. I knew for a fact, this is it, God. You're calling me to just quit my full-time job, which I don't recommend, but when you just have that sense of, I know this is what I'm called to do. I know this is the right thing to do. This is scary. And my wife was pregnant and we're buying our first home, but it didn't make any sense to quit my job at that time. But I did it, went all in at my dream career, and it didn't happen. It was the scariest moment in my life, with the baby on the way. And I read that email. Thank you for your interest in Henderson Fire. Went all the way to the end, all the way to the Chiefs interview. And honestly, if I could just pause for a moment, like, that was part of the reason I never really looked into investing or setting myself up for the future, because for 5 years, that was my dream, and going after that, all the money, all the time, all the hours spent. So I use that kind of as an excuse to not really pay attention to setting myself up for later, because I thought that was going to be all figured out by itself. And of course, Fire, great career and great pension, great retirement. So I had thought everything would be figured out. Even the job I was working, there was the 401k to set up, but it just was never something I really started. One, because they don't really explain it to you, which I'm going to go over tonight. That's why you're here. And then even when they do explain it to you, it's like some old lady from HR that just hands you a packet and says, fill this out, and then we'll have deductions taken out of your paycheck automatically to invest. Yeah, it's so true. Exactly. So to me, that was like the investing background or path was, okay, 401k, or what about a pension? What's a pension? I have no idea. My grandparents had a pension, but that was just where I was. And I know a lot of you can relate to that, but it's not explained. It's, here's a packet, fill it out, and we'll take money automatically out, and we will invest it. And you have no idea what's going on in the background. You have no idea how you're making money. You have no idea how this works. You can't even trust Sue from HR. So what is Sue doing with your money from your paycheck that's just disappearing? And so that's where I was. And so I never really thought I needed to worry about it because that I had a plan. I had a career. I wasn't going to be there forever. So I just held it off, never took advantage of it. But anyways, fast forward to being 28 and just that call of, now I got to go all in. I'm tired of my work calling me to work overtime. I'm tired of going in at 5 a.m. to cover other people's shifts. And so it was just that season of, if I don't do this with our baby on the way, if I don't take this leap and just go all in on this career I had in mind or thought I was called to do, it's going to be never, because I'm going to always be, as the supervisor manager, be working overtime. And so that's why I just quit my job, made it through the firefighter hiring process. And then, yeah, back to my story of getting that email of, thank you for your interest, but we decided to move forward without you. And it was like the world just paused. I just remember being upstairs in our home and thinking, I just remember thinking, holy crap, like, what do I do? How do I tell my wife? How do you tell your wife you quit your full-time job to go all in on this career that you knew God said, this is what you need to do? I'd worked there at that hospital for 12 years at the time. So just none of it made sense. I'm not even that type of person to just be doing things like that. But I just knew it was the right thing anyways. So that didn't work out. And then, which led to the dog walking business we started. But through that season of being without a job, being on food stamps, figuring it out one day at a time, by God's grace, being in that season taught me everything I want to teach you today. It taught me, because that's the thing, or that's the mindset when you think you had everything figured out, or you were able to just avoid learning all this. I had to just learn it on my own, because I'll never forget till the day that I die, that feeling inside of, we will never be in this situation again. No matter what, like, I will learn whatever it takes. God, put me through whatever you need to put me through, but I will never be in this situation financially where I don't know how rent's going to get paid. I don't know if all our bills will be covered. And so that's what led to this. So it is honestly incredible to be here to just show you guys what I've learned over the past 5 years and how it's helped people. And I'll explain like why we choose this style of investing. And mainly it's just, anyone can do it. Yeah. So anyways, that's my awesome moment here to just reflect on how it's been such a great ride and such a wild experience, and only God could have made all this possible. But I want to just get you guys to the basics so you know how to set yourself up for all of this. Let me share my screen here and we'll get right into it. Now, you can do this. In fact, I would recommend you do this on your own, because this, let me get to that screen. This is what inspired me to really just learn one thing after another. So this is an investing calculator. Can you guys all see that? Can we see the Ramsey investment calculator? Okay, great. So I would do this on your own and just play around with it. But for tonight, I'm going to walk you through step by step what every part means, because one of the most frustrating parts of learning to invest or getting started to invest is everyone says, just put your money in the market and let it, set it, forget it, compound interest. Great. All these terms that sound great, but what does it mean? I remember being in middle school and my algebra teacher at the time would say, he did a day of just showing, if you invest in the compound interest 10 to 12% over X amount of years, like, you'll be set. So I remember that was in middle school. And then I remember like being 19, 20 and working and having some money coming in and thinking, I was looking online for these bank accounts where I could get that 10 to 12%. Like, I would look online, see 1% interest, 0.5% interest, 1.5% in a CD. And I remember my middle school teacher told me, like, you want 10% or more and let the compound interest do its thing. And so I just remember thinking that like I couldn't find that anywhere, and I just got like gave up. Like I tried, I couldn't find anything. All I found was savings accounts with 1%, 0.5%, 0.01. So this is why I'm gonna break this down step by step to just show you guys what everything means and where exactly you can set up an account. And hopefully we'll have time to answer questions at the end. So, and again, I'm not going to explain this as in like you already have a lot of money ready to invest. Some of you might be in that spot where you're just ready, you have some money on the side. And a lot of you might be, you are starting from nothing, you have no idea about anything, which is exactly where I was. But this calculator inspired me to figure out more things to learn about investing. Okay, so I'm just going to say, for argument's sake, 25, current age. Okay, so again, I'm going to walk through this step by step. Age you plan to retire, 67. 67 is what society or the government says you can retire. That is when your Social Security, which is retirement money, and again, all of this will be an oversimplification, but it's basically when you'll get full retirement benefits. That part I understood. I figured you work, then you'd retire one day, hopefully, and the government sends you money. That's what I understood retirement to be. And so we'll leave that at 67 here. Okay, so how much money do you currently have in investments? Zero. At 28 years old, I had nothing. We were on food stamps. There was nothing set aside for a retirement. It was just, how can we get through this month? So we have zero. Okay, how much will you contribute monthly? So now this is where we can just start thinking of how much will we set aside? Obviously, there would be stages where if you have high interest debt, you need to pay off, like a credit card, 20% or more, pay those off. But after that, and I'll go more later into why you want to start with paying off credit cards first. But I still want you to be, even if you have credit card debt, I still want you to pay attention, because there's going to be a time where you are ready to invest after the credit card debt, or there's going to be a time where you're ready, but by learning this and sticking with it, you'll know, okay, I know what to do now. Thank you. At Simple Wealth, you can tag me and I would love to reshare it. Thank you. How much would contribute monthly? Let's just say, start with what you can. And so for us, that was like $78, $77. That was our first one. But we're going to at least say $250. $250 a month is not crazy. In fact, I would love if you actually did 500 to 600, but don't get too carried away. You can make that happen, but we're just going to say 250, and you're 25, maybe you just graduated college. And so you're starting slow. And this is the part where I'll explain, because no one explains it, is how the heck do we get that 10% return? But just stay with me. 10% is the average return of the S&P 500, which I'll go into. But let's see, what does that do? 10%. At age 25, by just putting $250 a month, starting with zero, $250 might, I know it, obviously your stage of life, what you got going on, but you can prioritize $250. I promise you, you can, if you make a budget, if you make a plan with your money, I promise you, you can make $250 commitment to yourself, to your future self. The average car payment is about $750. And that might sound crazy, but a lot of you can silently nod your head and agree with me that this is true, because I've coached over 100 people now this year. And that's what I consistently see is $750 car payment. I'm not saying right now to sell your car. I'm just saying $250 is not crazy. If you were 25 years old, I remember being 25 and I had a $450 car payment. So $250. Now, let's say you're my age, 34. Questions. I'm not looking at the questions, but I will get to them at the end if I can. Right now, I just want to give you guys a basic understanding of everything, which actually will help solve a lot of questions. So even at 34, $772,000. So even if you're just tuning in to my channel or just joining and you feel like you're behind, starting at the age of 34, when you probably started working at 18, or maybe you graduated college and you started at 22, you still have how many years? 33 years to invest at 34. And this is, guys, again, this is $250. I know that could sound like a lot, but when I look at your guys' budgets, or when I look at your bank statements and I have these coaching sessions and I see your income, like, I know you can make a $250 commitment to your future self. You could even, let's just start 40, 400. Now you start to see where there's a big difference in the return, but this is why the earlier you start, the better, because if you're going to wait till 40, okay, 772. So if you wait till 40, you have to make, I was close. You have to make a $450 contribution to get roughly the same amount. You waited 6 more years till 40. It's still possible. $450, you can still make that happen. Again, average car payment is around $750. Pay a car off and stop upgrading the car. Whatever you got to do. But you can see, you can keep playing around with this. Let's go back to 25, because I know there's a lot of college age, or I'll do 28 because that's where I started. 28. Oh my gosh. With a $450, which is what my car payment was at 28, $450 would have been $2.5 million return, or investment total. And that's just from the car payment. So I would encourage you guys to play around with this calculator with your own age and your own contributions. And I'm going to keep going through this, but here's where things just start to get crazy. Let's say we paid off the car. Now, instead of that $450, we're putting $750, $4.2 million. What if we just let it in there for a little bit? 5.2 million, 72. Now you can play with this all day and the number just keeps going up. The more years you have invested, the bigger the return. But like when I start putting 80 years old, 15 million, okay, that's great. But guys, get like 43. But guess what? What is 90 years old? You don't want to wait till 90, because like this number just gets pointless. 95, great. $71 million at 95. Who cares if you have $71 million at 95? You didn't get to enjoy life. There comes a point where it defeats the purpose of all these years invested. But what did you gain from that? You just kept it in the market forever and you never got to enjoy any of it. So the numbers just get ridiculous, obviously. Every year you add, just be crazy. But it doesn't really, there should be a detachment from you. The higher I put this age to retire in there, you should see that number on the screen, 116 million. That's just ridiculous. You should see that number and think, yeah, but like that, who wants to be 100? You will even make it to 100 to retire? Which reminds us that like our most valuable asset is time. So if you don't want to wait longer, you don't want to wait till late 60s, 70s, 80s. If you don't want to wait that long, then you need to like start as soon as you can, because the longer your money is in the market invested with compound interest, then the sooner you can enjoy it. And this is just one aspect. This is honestly the simplest way, and what encouraged me to start Simple Wealth was the simplest way is investing in your retirement, investing in your 401k at work or a Roth IRA, which I'm going to go deeper into the Roth IRA. But I want you guys to just see that and think, okay, this calculator is telling me if we invest, I like the 250. It just sounds nice. 250 at 28, Great. We should be set. But I remember doing this calculator, going through this and realizing that was at 28 with 250 with zero, nothing, 10% return. When I saw that $1.4 million or $1.5 million, that was the first time like I ever envisioned in my mind that it was possible to be a millionaire. Honestly, like it still didn't make sense because I didn't know exactly how, which I'm gonna show you guys how to do this, but it didn't make sense to me how to do it. But it was the first time I saw what, like we could be millionaires. That doesn't make any sense. But look at the questions here. Like it didn't ask you how many years did you go to college. It doesn't say which college did you go to. It didn't ask your race, your ethnicity. It didn't say, please upload a PDF of your Ivy League college degree, your 4-year degree. Obviously, you can do those things to help better your income, but all it's asking is, how old are you? How much are you willing to invest in yourself? And how long are you willing to invest? Those 3 questions. Nothing about what you've done in the past, nothing about what you maybe started or what you did, and now you messed. Like me, I thought I was a complete failure at 28, being on food stamps, no college degree, my dream job, which I thought was going to set me up for life, didn't. All those questions, I thought, I missed the boat. I didn't graduate. There's no career I can think of I'm ready or can do. All these questions is just how much are you willing to invest in yourself? So let's get into how exactly to do this, because I do know in meeting with a lot of you and doing this all year with my one-on-ones and getting a lot of your guys' questions answered, I do know there's this intent, there's this feeling of, I know I should invest. I just need someone to show me how or understand. Because one of the biggest, or if not the biggest rule of investing is if you don't know what you're investing in, then don't do it. You will lose money. I guarantee you will lose money. Whatever it is, whatever business, whatever investment, if you don't understand how it works, you will lose money, guaranteed. So if I can show you guys what exactly that 10% return or how to get that 10% or what it means to be invested in the market, then that's what I'm here for. So let's get back to, are we good? Are we picking up what I'm putting down? Seth says we're good. My wife, who's paid to say yes, said yes. Awesome. Thank you. Great. Oh, Cameron here. How you doing, Cameron? Awesome. Victoria, hope you're having a great vacation. Thank you for making this investment in yourself to learn about finances while you're in Costa Rica. Lauren's locked in, loving it. Pastor Gia, thank you for being here tonight. Question about inflation. So I will do the questions at the end, but I want to just power through. We're at the halfway point. I want to power through what just the S&P 500 means and how you guys can understand investing. Because once you get that confidence of knowing, putting dollars into the market and knowing how you're making money, then you will feel a whole lot better about investing. I do this joke on my Instagram stories where everywhere I go, I say, these people don't know I'm an investor in this place, because with the way we invest by investing in the S&P 500, we pretty much own everything. The world's economy pretty much works for us. What I used to get mad seeing a Starbucks line, five mile Starbucks line. Now I'm happy because Starbucks is making money. They're making me money. I'm all good. If you want to go waste your money at Starbucks, go ahead, because daddy is getting paid from that. That's really how it works with investing in the S&P 500. Let's get back to the screen share and let's get back to showing you guys how this all works. So back here, if you can see my mouse, what do you think your return will be? 10%. This is your return on investment will generate over time. Historically, the 30-year return of the S&P 500 has been roughly 10 to 12%. So first question I had was, what the heck is the S&P 500? Now this is all in real time. So what is the S&P 500? The S&P 500 is simply a stock market index fund. So you can invest in single stocks. You can buy, which is what we're all more familiar with. You can buy Apple, you can buy Amazon, you can buy Tesla. You can buy single stocks. And that's what you hear people say, oh, I bought Tesla, oh, I bought Visa stock, I bought NVIDIA stock. And it makes you feel like left out because you wish someone would show you how to do that. It sounds great. Everyone's happy. Everyone's excited. You'll always hear when people have made a good investment, they'll never tell you when their investments lost money. So you can buy single stocks. Now the S&P 500, it is a collection of the top 500 largest companies in the United States. So you could buy Tesla, but you could buy Amazon, which you guys are probably already buying 100 things off Amazon this week. And you can buy Ford. You can buy, that's a share Ford, share Tesla, Amazon, Google. You can buy all these individually in the stock market with a brokerage account. But the S&P 500, you are buying everything, all 500. Whatever you want to put in there. Actually, I'm going to keep showing you guys how this works because I know it's helpful. It helped me. I did a Google search, companies in the S&P 500. So when you buy S&P 500, you are buying Microsoft. This is a list of all the S&P 500 companies. Apple, NVIDIA, Amazon, Meta, which is Facebook, Instagram, Google, which is Alphabet, Berkshire Hathaway. So you should be seeing all these companies and thinking, yeah, that makes sense. Apple takes a lot of my money, so it makes sense that they are the second ranked company in the S&P 500. Google, I use that every single day. They have all my data and they sell all my data. That makes sense that they are a top 10 performing company in the S&P 500. JP Morgan Chase, your bank, Visa, there's Tesla, Procter & Gamble. You should be seeing this list of companies in the S&P 500 and thinking, yeah, that makes total sense. Walmart, Netflix, PepsiCo. Even if we scroll down to the bottom, let's see, what are the lower weighted companies in here? Etsy. Etsy is a great company. Etsy is a big company. They're on here. Some of them you might not be familiar with and you can look them up. Fox, we got Etsy, we got Campbell Soup Company. I didn't even know they were in the S&P 500. So you should be seeing these and thinking that makes sense. So for every dollar I put in the S&P 500, I am making money by Bath and Body Works making money, Best Buy making money, CarMax making money. This is where I wish someone would have told me I could just buy all the stocks. Because what happens is you buy certain companies or you might buy a share. Maybe you've messed around and you started a investing account, but you don't know, you might have listened to someone's advice, buy this stock, buy that stock. But the problem with that is the data says that 88% of people that try to buy stocks individually fail to beat the market. So that 10 to 12% return that I'm showing you guys, if you try to do this on your own, you might be able to beat the market. 1 year, you might have bought early on one company and then they took off and that's really cool. Like you go around the office telling everyone what stock you bought and how much money you made. But 88% of people that try to beat the market over 30 years fail. The market beats 88% of people that try to do this on their own. So while you can invest in single stocks and buy certain stocks, you can beat the market in any given year. Maybe you bought Tesla and you made 22%. Great. Awesome. But trying to beat the market every single year for 30 years when you're ready to retire, I'm telling you guys, 88% of people failed to do that. But the thing is, like, everyone thinks they're the ones that can beat the market. Everyone thinks they're the ones that figured it out, or they know a friend. And granted, there are people that really know what they're doing with that stuff. But over 30 years, it is almost impossible to beat the market that consistently. Because if you saw on that list, there's companies 10 years ago that were in the S&P 500, and now they've completely fallen off. In fact, Tesla just made it part of the S&P 500 like 3 or 4 years ago. So as companies start to do better, perform better, make more money, they go into the S&P 500. So that's why this is such a great hands-off way to invest, because it's self-regulating. As companies do bad, they go out of the S&P 500. And as they perform better, like you saw Etsy there rising up, Tesla just a few years ago making it in. As you saw, like, you didn't have to do anything. You bought the S&P 500, you invested in it consistently every month, that $200 a month, that $500 a month, whatever that is. And over 30 years, 88% of people fail to beat the market, which is what the S&P 500 is referred to, is the market. Anytime you hear someone say like the market, they're referring to the S&P 500. Because it's like an oversimplification of the U.S. economy and how it's doing. And so when you hear like the market's up, it's talking about overall S&P 500. When you hear the market's down, it's talking about mainly the S&P 500. So by using this strategy, I wish someone would have told me these even existed. I thought it was like stocks you had to buy. You can buy one stock, the S&P 500, and it'll regulate itself. And over the last 30 years, it has gained 10 to 12% return. That is why I love this style of investing, because if you guys follow on my social, despite me being crazy sometimes, the greatest part about this is we have so much time to do other things. I'm not telling you guys every day, look at this stock I bought, you should buy it. Look at this stock, look at that stock. I don't even have a conversation with my wife of what our trading looks like, because we don't trade. We just set it up automatically, put it on auto, which I'm going to show you. And then we just go about our lives. So that is something why I love this style, because I'm not going to try to beat the market. The data, the stats, the odds say you can't. So I'm not, and I just, as much as I love personal finance and things of this nature and stats and returns, and it's not what I want to do every day. You definitely can. Don't get me wrong. You can, but I want to hang out with my kids, spend time like building my small business, go on walks, work out. Like there's never been a time in the last 5 years where I've had to tell my wife, oh, I can't, like, I'm trading, I'm buying, I got to wake up early to buy. And you can do all that. I choose not to. Millions of people around the world choose not to. The data says, even if you do, 88% of you won't beat the market long term. I've shown you what companies are in the S&P 500. So now when you buy it, when you invest in the S&P 500, all these companies are now working for you. You can walk outside. You can see the lines on Black Friday. You can see the sales, hear about it in the news. You'll always hear that's the other thing, is you always hear when the stock market crashed. You'll never see, you rarely see when it's like at an all-time high. They like to talk about fear. And anyways, so let's look at a live chart. Okay. We're getting somewhere here. I hope this is all making sense, because it's important that I share all of this, because you have to know how you're making money. And so now that you can see what is in the S&P 500, You should be nodding your head. Yeah, that makes sense. Okay, so when I put money in, all these companies are working for me. So one of these funds, which I like from Vanguard, is VTI, and VTI tracks the overall market. And so for the sake of this webinar and learning, it tracks extremely close to the S&P 500. The exact fund for the S&P 500 would be VOO, Vanguard's. There you go. See, Vanguard S&P 500. I'm going to break it down even simpler. Vanguard is the brokerage. Okay, that's like step one. What is Vanguard? Vanguard is the brokerage. Now, when we open up our bank accounts, we go to Chase, we go to Wells. Oh, hopefully you don't go to Wells Fargo, but we go to Chase, Wells Fargo, we go to, geez, what are the other ones? I don't even know. Where do you guys bank at? I go to Chase. I don't even remember last time I went to a bank. Bank of America. Okay, great. Chase, Bank of America. Awesome. Okay, great. So those are banks. That's where we get our checking accounts, our savings accounts, things like that. So, but a brokerage, credit unions, yep. Brokerage, that is where you can get a brokerage account, which is investment accounts. So Vanguard is a brokerage. Other ones you might be familiar with are Fidelity, Schwab, TD Ameritrade, things like that. This is helpful because I had the same thing. I had no idea. Where do I even go to open up an investment account? You go to a brokerage, and Vanguard, Fidelity, and Schwab are all great examples of a brokerage. So now so this is the Vanguard brokerage, and the fund is the S&P 500 ETF, Exchange Traded Fund. So that ticker symbol is VOO, and that's the top 500. VTI is, it includes the S&P 500, which is the top 500, but it also includes like the little guys. So there's large cap, medium cap, small cap, basically oversimplification. All you need to know for this thing is, or for today, is VTI tracks the S&P 500. If you're following on my Instagram today, I said stock market reached an all-time high. And here we go. You can see today, Tuesday, November 26th, it has never been higher. So if I do a max view, starting from June 1st, 2001, you can see the all-time high, the highest it's ever been, was today, $299.05 a share. So that was all-time high. It means it's never been higher. Now, as we go through this, you will see it goes from left to, and the average return has been 10 to 12% a year. Some years, like here we go to March 2020. We all remember that. I'm going to zoom in more to that, 5 years. So here's COVID. You can see, yeah, that makes sense. There was a huge drop off. There was a huge crash. I remember seeing our investment accounts like lose $20,000 in 1 month. And for us, like that was insane. I didn't even know that was possible, but that's why we keep investing. We kept putting in that $200, that $250. We started off with $75. That's what we could afford at the time. We saw how we were making a return, so we upped it as we could. And the stock market continued to rebound. Here, it was at a 171 in February 2020, right before COVID. And what was that again? 171 to get back. It got back to the same amount by August. So that is why no matter what, you keep investing, and the market recovered in 5 months, and all of 2021. Oh my gosh, like every time you put in $1, it just multiplied. There's small crashes here and there, but over time it just went up, up, and up. So it is healthy for the economy to return back to normal. So 2022, that was a rough year for investing. Things might have had good days here and there, but overall it went down. Yes, there is risk with investing, but I'm going to show you guys why this way protects you. That you're not going to just put money in and it's going to keep multiplying and keep going up. And simple said 10 to 12% a year. Yeah, that is when you take a look back, when you zoom out, when you have a bird's eye view. There's going to be crashes right here, 2008. You can see just from 2007 to 2010 just went down. But over time, it continued climbing back up. And when you zoom out, in fact, start investing and then don't ever look at your account again, honestly. My wife never looks at our accounts, and that's perfectly fine because you don't need to. You just need to invest every month, let the market do its work. And yes, there's going to be a 2020 happen where there's a crash, and there's going to be a 2008 that happens like right here. But overall, in the last 30 years, it has averaged 10 to 12% return. And people that invest this way have the odds are in your favor to beat people that are buying individual stocks. You can buy individual stocks. You can beat the market any given year, but over 30 years, the odds are against you, 88%, like I shared. So anyways, I'm walking through all this, you guys, to show you these are the companies that make you money. Here is a history from 2001 to today at an all-time high. I'm being as transparent as possible that yes, there are times where it goes down. There are times where it goes back up and it feels like everything's great. Like 2024, it's been a great year for investing. But if you invest little by little, month by month, that's where we get back to, even at 28, $250 a month. Again, and from that 1.4 million, you only contributed $117,000. That is insane. If we did a bank account, which gives you 0.01%, we go from 1.4 million to $117,000. Are you kidding me? Now there's a place for a savings account. Definitely. We have money in a savings account for like short-term purchases, things we're going to buy, like we're saving up for a car. So we put that money in a savings account. But for your future, for your investing purposes, why would you put it in a savings account to get 0.1%, a full 1%? 143,000, of which you contributed 117,000. It makes no sense. Like you shouldn't do it. That's how you stay broke. But if we invest it in the market and we understand, like I showed you, there are periods where it goes down. Here's COVID. It went down. It slowly but steadily went back up. There are periods where it goes down, but you got to keep investing because over 30 years, it's the same $117,000 we contributed, starting with nothing, $250 a month, which is doable. Now, obviously, your age is going to play a big part in what this looks like for you. But even at 28 or 34, that is a whole world of a difference between that 1% from your savings account, if that. 117, like no way. Mess around with that. But these are the principles: is you invest what you can each month. Now, if you were to max out a Roth IRA retirement account, that's looking, the max right now is $7,000 a year. So that would be, I don't know, I think it's around $600 a month, give or take. Oh, 588, Victoria's on it. Awesome. So that's what we're doing because we see the power in what investing looks like, because these first few years, it's not as noticeable. Once you get to your first 100,000, it really starts, and it will, because the interest is working in your favor. It's building 20% one year, 5% the next year. Maybe there's a down year, -8%. Then it comes roaring back 30%, but you got to have your money invested to take advantage of the compounding, because once you, like, the first 100,000 will be your hardest, and that might take 8 years. Well, that's totally fine. You know how this works now, which companies are making you money. You know what to expect over the long run of how to make money. But you just got to keep building. This is why a lot of financial, whatever you want to call it, financial advisors, financial coaches might give you guys a hard time about the coffee, the car payments, because your first 100,000 is so important and so vital to exploding this compound interest. Just if anyone ever asks me my opinion, I just say, get your first 100K, then buy whatever car you want. You know what I mean? Have a budget, have a plan, but whatever you can do to get that first 100,000, it might take, 8 to 10 years, but you can make that happen faster with a side hustle, with better paying job. There's ways to get there. For us, from 28 to 34, we were able to go from food stamps to being over 100,000 in investments. Like, it's possible, but it took some hard work. It took some sacrifice. In that season of food stamps, one thing that I'll always remember, I'll never forget, is having that $450 car payment like I was showing you guys. And at that time, it was my dream car, had everything I could ever want in it. I remember that moment like it was yesterday, driving in the leather. It was one of the first cars to have that Apple CarPlay, that even had automated driving, even before Tesla had it. Like, it was honestly my favorite car. But I'll never forget, on the way to CarMax that night, crying with the perfect playlist, with the perfect songs, driving down the highway at night, and knowing I'm going to go sell my car and I have no idea when I'll ever get my dream car again. But I knew it needed to be done. I knew it was important for us to build that foundation again of getting back on our feet, paying our bills, being able to be in a spot where we can afford to invest. Like, it just wasn't possible. For us, it meant selling that car and sticking with our Toyota Corolla, which I'm still driving today, and me driving a bike after that. At 28, very humbling, but that's what it took to put ourselves in a situation where we can reach what you're seeing, that 1.4 million, 1.5. It took sacrifices for us to get here. I am not saying at all that getting to that point will be easy, but I'm saying it's possible. I just met with a couple last week where they have a $1,200 car payment. There was no way going around the conversation of, this is going to sabotage you guys for the rest of your life. I hate to say it, but there's just no room in your monthly finances to make investing a priority where you can retire one day with the $1,200 car payment. And I see it often. I see $800. $1,000. There's nothing wrong with it per se, but if this is serious, this is a priority for you to be able to retire one day, for them, that meant not having a $1,200 car payment holding them back. For us, that meant not having that car payment with no money coming in because I was unemployed. That was a tough thing, but it honestly was one of the best things I ever did, because it like lit this fire of, I will never forget crying on the way to CarMax, selling my car, never wondering if I'll ever get this car again. But that's what it was for us. And now today we can buy whatever car we want cash because we have our investments going. We have our monthly budget in place. We know what to spend. We know what's coming in. We know what's coming out. That was what it meant for us, is getting rid of that and putting our money to work in the stock market. Okay, so now coming up on an hour. So I do want to show you guys, okay, great, 10 to 12%. We know how our money is invested. We know how the S&P 500 works. Now, where the heck do we go to do this? So I'm going to just be transparent with you guys like I always am. Sometimes my wife calls me and says, hey, delete that post. That is way too transparent. And I say, no. The people want to know. The people need to see it. The people need Simple Wealth to be transparent and show them the truth. I'm honest with you guys. There's years like 2022 where we didn't make any money that year. We lost 20. We didn't lose. The money stayed in the market. But yeah, that was the reality. It was a down year because 2021 was such a roaring year of returns. And I wouldn't be surprised if 2025, it's not as great as 2024, but that doesn't matter because we're going to keep investing month by month and let the market do its thing. So back to this. So this is going to be super transparent. I'm going to log into my wife's Vanguard account. And so the reason I love Vanguard is because Vanguard created the index fund. In the early 1970s, Bogle created the index fund, which I showed you guys, the S&P 500. That index fund totally disrupted what investing was. And so, yeah, shout out Nikki for letting me go through her account. They created the index fund to help the everyday person. In fact, they are not publicly traded. So even though Schwab is a great company, Fidelity, great company, a lot of you probably have your 401ks through Fidelity, great company, but they're publicly traded. So they respond to stockholders and investors because you can buy stock in Schwab, you can buy Fidelity. Vanguard, you can't. They are like for the people, by the people, and they pride themselves on being the lowest cost index fund in the market. A lot of people have caught up and have matched their low fees. But when you say low fee index fund investing, Vanguard is the leader. They created it. They aren't publicly owned. So this is why I love Vanguard. They're for the people, just like Simple Wealth, just like me, for the people. And they created a robo advisor, robo investor, because if you were to do this, or where we go, if you were to buy this fund, the VTI, total stock market of the index fund, you would go into your brokerage, you would buy VTI, and then you would do all that yourself. Now, Vanguard created Vanguard Digital Advisor, which is what we use. And it's a robo-advisor that does all of this for you. And by all of this, I'll show you exactly what that means. So here we go, logging on my wife's account. And let's see what's going on here. It's going to text me security. Great. Nobody hacked me. Yes. No, prompt me every time. Cool. So we're logging in, and this is our Roth IRA for my wife. So a 401k is an employer-sponsored retirement account. So your employer probably most likely has a 401k for you to invest in. But a Roth IRA would be if you don't have an employer-sponsored 401k and you want to set up your own thing, you would open a Roth IRA. So those are the two things. It's employer-sponsored 401k. We're talking retirement accounts for the sake of this webinar, which is where everyone should start, your retirement. You get your retirement set, you can then do whatever you want. Invest in crypto, invest in a normal brokerage account. You get your own personal retirement set, then you can dive into whatever you want. That's just my personal take. So a Roth IRA through Vanguard, if you were just starting, you would just create an account. You would go to Vanguard. I like Vanguard Digital Advisor because this robot does it all for me. And then boom, open an account. And I know that might sound scary, but if you can create a Netflix account, if you can create an account, all it is asking for your name, your social, where you live, standard stuff, just like any other account, bank account you would open. So Roth IRA so Roth IRA is the account type. You can open up the account type, but you want to buy funds in the account type. So the fund itself is VTI, but VTI is within your Roth IRA. So there's a hierarchy. There's the brokerage Vanguard, then the account type is the Roth IRA, and within the Roth IRA are the funds itself. So great question there. But here we are, my wife's Roth IRA. You can see we've been investing for the last 4 years, and she has $37,156 funding her goal, which is retirement. Gives me a great chart here of what we can expect for her. So by retirement age, she most likely will have 1.1 to 1.5 million, or just over 1.5. And if we continue investing, which is right now that $500 a month, because we were doing 75, we were doing 200, but the more we just saw this thing working, the more we prioritized it. The more we got to our budget and decided, you know what, we're not going to upgrade our Toyota Corolla right now. We're going to invest as much as we can and figure out and save for another car in the background. We made investing a priority to where we max out her Roth IRA and we max out my Roth IRA. But that's where we're at now from prioritizing this over the last 6 years. We didn't start doing this, so you might not be able to start with 500. For us, we're at 1,000 a month. But guys, like, we prioritize it. You can too. Sometimes or a lot of times, your money is already hijacked from credit cards, car payments, houses you can't afford. But I honestly believe, even though we did those things, or you might be in that spot, I honestly believe knowing what you know now will help make better decisions going forward. Because when we bought that $35,000 sedan, that was my dream car, we honestly didn't know what we were giving up by doing that. We thought we were buying a car we could afford because we could make the payments and everything was going fine. Like, we didn't know what we were giving up, where if we could have bought a $200 a month car at the time and invested the difference. Like now today, like buying a $700 car payment, that I wouldn't want to do that because I'd rather that $700 go into investing while we're saving little by little on the side to buy a car in cash whenever we need to. But again, this is what it looks like for her if we keep doing what we're doing. Okay, so now I want to show you guys what is in that $37,000 that we have invested. Here you can see assets. Okay, we have $37,156 in her portfolio. So that currently is comprised of 100% stocks. Again, the robot handles all this, but I'm going to break it down as much as I can. The younger you are in general, the more you want to be in stocks, 100% for us. As you near retirement age, you will want to be invested in a more safer asset called bonds. Stocks are you're owning companies, you're owning shares of companies, you're owning the Teslas, the Amazons, the Facebook, the Google. Bonds are you're loaning your money out. And so you're not doing any of that. The robots are doing it. This is why I love the robot. I don't got to buy bonds. I don't got to sell bonds. I don't got to buy stocks. The robot handles it. But the robot has decided for us, we are invested 100% stocks because we have a long investing horizon. We have a long window. So later on, it'll get safer in these bonds because a bond is a loan. And so Vanguard's going to loan money out to safe companies. But because it's a loan to a safe company, it's going to be a lower return. Good. It's going to be a safer return. So you're going to get a lower return. If you're invested in a stock, there's more risk. But because we're 34, 32, we have a longer horizon. People here listening and in their 20s, you have the best opportunity in the world to start investing and letting 30 to 40 years of interest compound in your favor. Back to that chart, it was like 117 of your own money was invested, but ended up being 1.5 million. Like, where else are you getting that return from something as simple as this, the stock market? So here we go. 37,000, 100% is in stocks. So what is that 100% stocks? What is that 37,000 invested in? Here, I think you guys can see my mouse, I hope. But 61% of that is in, like I showed you guys, VTI, the total stock market, the total US stock market. Every US publicly traded company is in VTI. We own all of it, and 61% of our money is in the US economy. Now, the robot also chooses another fund another index fund, VIXIS, which is the total international. So that 100% stocks is divided 60-40. 60 of it is in the US and 40% is in international. So back at the beginning, I said, I can walk outside and pretty much every single company is working for me because the Sonys, the whatever other foreign company you want to think of, it's all working for me. The total international market and the total US market, 60% of US is in my pocket and 40% of the international is in my pocket. And how does that break down? That breaks down to 14,000 being in international and 22,000 being US. This is full transparency showing you guys, we put our money in month by month. It is now 37,000. Okay, but how much of that 37,000 has been our own money? So we go to performance. Okay, so of Nikki's 37,000, we can see month by month what that looks like. So net cash flow. Perfect. This is what I was looking for. So of the 37,000, we have a net earnings. I want to go to, oh, this is a 1 year. Okay. So since we started, that's what I'm looking for. Bear with me, guys. It's all live, which is great because I'm not trying to be sneaky. I'm not trying to say, do this, but I actually do something else. This is what we do. So since enrollment, so we started for her, like I said, 4 years ago. So May 2021. And you can see it has been some downs. It has been some ups. So since enrollment, there we go, downs and ups. 2022, like we saw in that chart, was a down year, but then it started coming back in 2024. Here we are, all-time high. So our since enrollment, net contributions, 23,000, net earnings, 7,000, market gain, $6,000. And so what the robo advisor fee is, because I choose not to do it myself, I choose to use a robot. So you might be thinking, what are the fees for a robot to do this? It ends up being 0.15%, 0.15%. So that has, from this 37,000, that has translated to just $98. So I paid over 4 years, we've paid $98 for a robot to automatically invest in VTI, invest in VIXIS with the international. And as we get older, it's going to reallocate and put money automatically in bonds. I don't have to worry about readjusting it later. I don't have to check every day, every month, every year. The robot's handling it all. I personally, this works for me. Maybe this might work for you. Maybe you're more control. You want even more hands-on, then it might not be for you. And that's totally fine. This works for me because I enjoy doing other things in life. I enjoy working on my small business. I enjoy working out, competing in triathlon, spending time training. I enjoy coaching people. Some people enjoy watching stocks and trading and all that. Then this might not be for you, but full transparency, since 2001, we have paid just $98 in fees. And again, Vanguard is the lowest fees on the market. It's why I love them. It's why I use Vanguard Digital Advisor. And $98, which doesn't come out of our pocket. It comes out of the account balance. So it's not something you'll see that like you paid out of your checking account. But that has resulted in $37,000 ending. And that is, if you ask me, pretty incredible. So I showed you guys what is in that 37,000 so far, 60-40 split between US and international. Now, how do we, and the last thing before we end here is, okay, so now how do we buy the stocks or how do we tell the robot what to do? I was just showing you guys a breakdown that everything I'm saying all adds up. I explained what VTI is. We understand what is in VTI. So if we were to log in to Vanguard, we would go to move money and we go to contribute. This is all live. I'm letting you guys into my life behind the scenes. No BS, no complications. So here's our JP Morgan Chase. There's our checking account. connected to Vanguard. Now we want to contribute to our Roth IRA, which is my wife's Roth IRA. I have my own. She has her own. Yeah, keep going. So we can do a one-time investment. We can do recurring, which is every month. It'll do it automatically. We can do every week. The main thing with the Roth IRA, which is a retirement account, you have your 401k. You can do a Roth IRA, which you don't need to have a 401k. Like for us, we have a 401k at my work, but there is no match. So I skip the 401k here and I just do a Roth IRA for retirement, Roth IRA retirement. So for us today, if we did a one-time, I could max it out for the year. So for us to max it out, that would be $1,600. But today I'm going to do back to that number, $250. This is all it takes when you do it this way, guys. I've joined so many of these webinars where the person just like me is on here showing you how to buy the fund, how to reallocate later, how to buy 60% BTI, 40 international. And that was great. Nerdy people like me like that stuff. A lot of you though can relate more to my wife where all that sounds great and all, but we're just going to set it automatically because we just want to do other things, and investing, we want the benefits, and I'll gladly pay that $98 of over 4 years to do it for me. I don't think there's no other fees than that. There's no like monthly subscription. There's no annual fee. It's not a credit card. It's not a bank where if you have a low account, it's going to give you fees. This is how it works fully of going this route. So for 2024, we're going to do a one-time. Just today, we're going to do $250. All it's asking, confirm this, a one-time investment, $250. We could set it up automatically to do it for us, $250 a month. And for tax year 2024, right now you can invest $7,000 a year. So you want to just make sure that you're sticking to that. But if you were doing a reoccurring, Vanguard will do it for you, recurring to max it out every month. It'll do it automatically for you to hit that 7,000. Oh, like Victoria said, 583 or 588, whatever it was. But for today, I'm showing you full transparency how we're going to invest. We're going to invest right now $250 into our 2024 Roth IRA. Confirm. Success. We'll start on your contribution. So now it's going to buy $250 worth of shares for our Roth IRA. It's going to automatically buy BTI, the US market. It's going to automatically buy the international market. And all we have to do, like from this point going forward, is make sure we can afford the $250 a month, or for us, the $500 a month. And we make it a priority with what our spending looks like, what we're buying, what's coming in, what's coming out. We prioritize our generosity. We prioritize our investments because now we know we're set. I showed you the chart earlier. Nikki's account can expect 1.5 million. Incredible. My account can expect 1.5 to 2 million. Incredible. Now we can move on to other things. We can not just focus on retirement, but what about accounts for today? What about investment for our kids? Because if you're able to set yourself up like that, where you're going to be set for later, whatever that amount may be, 1,700,000, which is where coaching comes in. You definitely want to get that dialed in of how much you'll need. But that is how simple setting up your retirement account can be. You open an account. I really wish there was more to it, but that's something that just amazes people is I spent an hour talking about just how you make money, what you invest in. And I could have spent like 10 minutes saying, open a Vanguard account, put on contributions automatically, and that's it. Here's how it works. But you need to know how it works because now you have that confidence of, now I know every dollar that goes in, what it's invested in, how I get a return, what I can expect. There's going to be down years. Another common question is, okay, but what if I lose all my money? What if I start investing and it's gone? And my favorite reason for choosing this style of, I showed you guys those companies. If you invest this way, where you're invested in the whole economy, the whole US, the whole international, if you invest this way and your account goes to zero and you lose all your money, which could happen, that means money has no relevancy. That means it doesn't matter what you had in your account to begin with, because the only thing that matters is how much canned food you have or ammunition you have. Because if you're invested in Google and Amazon and Microsoft and Chase, Bank of America, if you're invested a Visa, MasterCard, if you're invested in the whole world's economy and now your account balance is zero because you lost all your money, is the least important thing to worry about. So yes, there's a possibility, but that means World War III or IV broke out and your money is worthless anyways. If you invested in just Apple or Apple, Tesla, NVIDIA, there's a high chance that 10 years from now, those companies don't exist anymore. Or I don't know, things can happen day to day. A company can go woke and everyone's boycotting them, like we saw with Bud Light. And then that stocks tumbled and they never recovered. IBM, Dell, they're perfect examples. They were high up on the S&P 500 and they fell out. You could lose money investing in single stocks and they just never bounce back. But if you invest in the whole world's economy and then like you lost money or your account balance went to zero, money is the least important thing to be concerned about. So that's why I love this style. Hands off. I didn't have to do anything. I showed you guys how it worked. And more importantly, I showed you how you make money. That is all I have for you. I'm going to stick around and answer those questions. But if you were tuned in wanting to just learn and get a basic concept of how the stock market works, how investing in index funds work, I hope I was able to provide and show you guys fully transparent of what we're doing. And this is just an hour we had. There's so many other steps of what you could do, but you want to start with your retirement account. But if that's something you guys would want to get more clarification for yourself, I don't have anything of like program or package right now. Just follow me on Instagram. You probably already are. That's why you're here. Yes, it'll be a replay. And then I'll share with you guys just how to do more one-on-one coaching where we can take a look at what you're actually dealing with. Because the first step for some of you or a lot of you might not be investing. It might not be getting straight to investing. It might be paying off some debt. And that's what I love helping with is looking at your finances, looking at your overall situation. It might not make sense to start investing if we can't even get by through the month. And that's where I was. There's no shame, but at least you're here today where you learned how it could work for you, how it all ties together, how the market in general works. Okay, great. We have an understanding of the S&P 500, the top companies. We have an understanding of 88% of active fund managers, active being day traders, 88% don't beat the market long-term. So if you could do this for your retirement, for your foundation, it opens up a whole world of what's next. Once you start maxing out that Roth IRA, which we started doing just over the last few years, now it's what's next. And that's for us, let's really maximize like our small businesses. Let's see how much we can do in that area because our investments are on auto. We're good. How can we make money with our small businesses? How can we set that up? And then it started becoming, okay, now mom and dad are set. How can we start our kids? And we're investing now for our kids' accounts. And they aren't starting at 28. They're starting at 5. And they got 40, 50 years. And like, how great would that be if mom and dad can set themselves up to where now you can start investing for your kids? Mess around without a calculator and put starting at 5 years old. Multi-millionaires. And does that mean anything as far as the dollar amount? Not really. Like you're thinking more about the sense of peace, the sense of a financial foundation. Like what would it look like graduating at 18 and your parents started for you at 5 and you're already at that $100,000 mark? There's so many benefits to making this a priority because that's where it becomes life-changing for your whole family. That's where it becomes fun, where it's really cool to see what her outlook can look like. And dang, at 18, man, if I started out at 18 knowing I already had $100,000 and let that compound for another 30 years, what would it look like if our worst case scenario in life, our kids' worst case scenario in life is retiring a millionaire? That is what this all leads to, is setting yourself up so that way we can set up our kids, and their worst case scenario in life was their parents put in the hard work, sold the car they needed to sell to get ahead, worked on other things, their business, their day job, whatever that means for you. And now our kids are already set up where their worst case scenario in life is, if everything fails, they're going to retire multi-millionaires. That's what this leads to. And that's what I hope I encourage you guys to get an understanding of so you can start doing this. So again, I am done. The webinar is closed, but I got questions. So I'm going to at least stick around and answer as many as I can. If you are, again, thank you guys for joining. Love that you were able to be part of my first webinar. I thought this was fun. I thought it was pretty nerdy, but also valuable. I wish someone had explained all this to me in my early 20s, in high school, 25. It took me years to just learn this stuff. Thank you guys. Have a good night. I'm going to go home and see what my wife and kids thought because they said they were watching. So love you guys. Talk to you soon. There will be more webinars, different topics, maybe more for your kids, maybe more for your small business, maybe more for whatever the things. But I wanted so badly to do this for so long. So thank you for joining me. Happy Thanksgiving. And I will stay in touch with you guys for the next webinar. Have a good night, and I will see you on the next one. Like, comment, subscribe. See you guys.